Disclaimer. Trading financial instruments carries risk. This material does not contain investment advice, nor should it be viewed as a personal recommendation, or an offer of, or solicitation to trade in financial instruments. Past performance is not a guide to future results.
Hello everyone and welcome to a new ATFX Connect video. My name is Gonzalo Canete and I'm here to give you a good quick update of the situations of the global market, equity, fixed income, commodity, forex, even Bitcoin is the asset we're going to review today and see how it's going, the economical cycle in all sense. Let me share the screen with you. First of all, we're going to check the calendar. We're going to review also the data from today release. Please remember, I'm posting every single morning the quick update of the markets on our blog, so you can access here to summary of all what I consider really important and mainly what's the interpretation and the effects of this last 24 hours news on the assets, on the financial assets. Mainly what we got today, this morning, it was first of all from the European side, we got the SIP ZEW indicator in Germany and in Europe, which it was positive, not so bad. Still the market, it was not reacting in any kind of positive way. It was not celebrating nothing at all. We can take a look to the charts to see that actually DAX 40, which is the biggest European equity index, is still not breaking clearly the 17,000 points, the barrier of 17,000 points, a clear resistance there. You have seen that the last few seasons it was actually breaking up the 17,000 points, but as I was saying on the previous reports, do not trust on those breakouts unless you see the price getting consolidated over those levels, which is not the case, and therefore keep calm, remain calm, and do not consider this as a kind of bullish signal to start to buy. Although also on the next level it could even keep rising, but still 18,000 points, as you can see, it's probably one of the main second barrier, second resistance that we're gonna find on the price. And in the other hand, we can see that in case of a correction, the number of points that the market could actually lost is like around 3,000, 4,000 points, which is a risk-reward ratio that is not the best if you consider the levels that we are at the moment. So just be cautious on the European market. I was talking about the data. This indicator was showing us in terms of economical conditions and sentiment, it was positive, not bad. But in case of unemployment rate from France, you will see that actually I was giving to you the summary here where it is. Indicator, DAX 40, Q40, Bank of England. Well, the unemployment rate in France, it was not the best, but it's still keeping run. In France, against market expectations of 7.4%, the unemployment rate remained stable at 7.5% for the Q4 of 2023. This is the numbers for the last quarter of 2023 last year. However, the European stock markets do not seem to be encouraged. The DAX 40, it's not broken the 16,000 points, the one I was mentioning to you. Now, the next country we need to review with important data today, it was United Kingdom. It was giving us actually really good numbers in terms of labor market. Let's take a look too, and you will see the reaction of the pound, cable. It was actually good. Today's UK economy data looks positive. The average earning index rise above expectations to 5.8% from 5.6%. The unemployment rate also improves, falling to 3.8% from 4.2%, and beating expectations of unemployment rate of 4%. So again, it's improving the earnings, average earnings is improving also the unemployment rate, which is giving to us a kind of signals of strength on the UK economy. However, wage rose at the slowest pace in the almost a year. In any case, Bank of England main concern will be that the labor market has not cooled enough to allow a sustainable return to 2% inflation rate. The worse the better if we are to see rate cuts in the UK. And therefore, if the numbers are good and the employment rate is still falling, Bank of England is not gonna gain the confidence to cut interest rates, and that's why in our previous report I was mentioned to you that probably between Europe, United States, and United Kingdom gonna be the last one to cut interest rates. Some market analysts just predict that probably could be around August the interest rate cut in England by Bank of England, in United Kingdom. But still, I just want to remind you that all of these are speculations. Even when the market was discounted 2 months ago by 75-80% probabilities or chances to interest rate cuts in March, today is low than 30%, which means like absolutely everything is changing with the pass of the days, with the pass of the weeks and months, also depending on the data has central bankers are constantly repeating to you. We're gonna decide based on data, the data, and day by day decisions are taken based on the data that they got day by day. What else from Asian market? Because let's take a look on the cable first to see what was the reaction of the market. Let's go to a more intraday view, and as you can see, pound has been rising since the last few hours. And yesterday, this week has been rising strongly, breaking up the 200 moving average. But if you take a look closer, you will see that in long term, again, we are facing a new resistance levels, which is still, if you are a day trader, you can still find interesting the pound against the dollar, because it's probably gonna keep moving forward to 1.2750, 1.28, but as you can see, it's a strong resistance in those areas, and probably a correction will come sooner or later, which it will be in line with a strong dollar, that it seems to be the case. I mentioned to you and I shared with you these charts. First time I saw this chart with this bullish pattern was in 12th of January. It posted on our social networks, you can find that. And finally, the target was achieved. It was 104.50 points on index dollar that it was touched, and the price was just immediately after cooling down. We are seeing now that it's in around 104.15, 12 points, but still, if this index is rising and is breaking up 104.50 and consolidate the price over above those levels, probably the cable gonna start to drop. Has euro dollar gonna start to drop also too? That's the case. You can see also our target of 1.0750 was touching euro dollar, and the price was rising back again. But again, if we lose definitely these levels 107.50, we're probably gonna see that the price drop into 104.50 or 105, which is the main supports on this market. I also had included some data related with Asia. You also get here, it's still closed, the market in South Korea, in China. So Hang Seng is closed, Shanghai Composite is closed. Is the last two index that has been mentioned in our last report, basically, because the Chinese market has been dropping for the last few months compared with the US market, who has been rising for the last few months, which is a kind of divergence that is very interesting to analyze. Has been also few announcements from the Chinese government and Bank Popular of China that give us certain optimism on the market, and it was actually rising, but for a while. And we will see when the market will be back to online, let's say. We will see how was the reaction of these announcements and the Xi Jinping request for a special study of the situation of the financial markets in China. But the thing is, in Japan, which is open, Tetsu stocks led advance as Tokyo Electron increased its full year revenue and profit guidance. Japan's Nikkei 224 stock average monetary increase by 3%, marking its largest gain since November 2022. So Japanese market, it was actually rising. Let's take a look on Nikkei. So we will see, look, amazing, beautiful. Let's take a look on long term. Amazing, super bullish market. Again, we need to be careful with Nikkei and with Japanese assets, because if you take a look also to the currency, you will see that Nikkei is getting Japanese yen is getting so close to another correction against the dollar. So in other terms, if you invest in certain Japanese assets and this pair dollar Japanese yen is staying, is breaking up certain levels, you're gonna lose part of your investment. Or we also can see the other scenario when if the monetary policy is changed, which is something we was expecting for the first quarter of this year, a switch of the monetary policies from Bank of Japan, obviously turning to a more tough monetary policy. In that case, yen will twist the pair dollar yen down, and the yen will increase the value against the dollar, and therefore probably the equity market Nikkei will drop against will drop mainly because the yen gonna just make a kind of effect of what we can define like the kind of effect that trying to push away internal investment, because the conversion is going to be more expensive, and therefore every single asset quote in Japanese yen is going to be more expensive if this pair is twisting down. Which is, if you take a look in long term, you will see that actually dollar Japanese yen has been there few times only. Take a look. Last time it was in the 90s, 1990, summer 1990. Japanese yen was 159, 158 yens per dollar. Right now we are in 149 and still keep pushing up and up. So those ones who find the right level to short dollar Japanese yens probably can hold that position for months or even years with an amazing results. Okay, let me set this full screen with you so you can see in detail the levels I'm signaling on the chart. What else? Trade war. The trade war. In response to allegations that roughly 22 companies, 3 of which are based in China, are having Russia's military operation in Ukraine, the European Union has put forth new trade restrictions. Should it be approved, this will mark the first time since the invasion of the bloc has placed limitations on business operating in mainland China. Companies from Turkey, Serbia, India and Hong Kong are also in the list. So again, European Union is placing a blacklist, and this is part of the trade war and sanctions applied to Russia since 2014. Remember that it is since 2014 when these sanctions start to be in place. What else? We also can see that Ukraine demands that Polish farmers be held accountable for grain spills. If you follow the news in Europe, you will see that farmers are protesting around the whole countries in Europe, but also Poland is one of the main one of the countries that started this movement of farmers protesting and cutting roads. In the case of Poland, the reason was they were protesting against the importations of grain from Ukraine, considering that Ukraine is not a member of European Union, and as exceptional situation, the European Union, the politicians decide to import grain from Ukraine, regardless if it's according with the articles of constitution of the members of the club or not. It's interesting to read what was also the comments then done by Ukraine demands Polish farmer, by the Ukrainian Foreign Minister Dmytro Kuleba. He say, for the sake of friendly Ukrainian-Polish relations, the perpetrators of this provocation must be held to account. Now, he brought that on X, but the answer from Ukrainian government, it wasn't short neither. He say, Poland's disconnect against what farmers and others perceive to be an increase of grain and food imports from Ukraine and unfair competition has affected relations, despite Warsaw support for Ukraine during the Russian invasion. So regardless of Russian invasion, the farmers in Poland consider this situation unfair for them. Help, and this is a quote, help for Ukraine in its fight against Russian invasion cannot come at the expense of Polish farmers. Representative of Polish government, Mikhail Kolothiecak. The Deputy Minister of Agriculture for Poland announced early on Monday that Warsaw will begin enforce quality controls on all grain imports coming from Ukraine. As you can see, not the best moment for relations in east of Europe between Ukraine and its countries, and you can put on the top of that list also Poland and Hungary, because Hungary also has been protesting against the budget destined for Ukrainian war and so on. My friends, I think that's all. That's the last news I could share with you today. We're gonna keep doing the report. I will see you on Thursday to give you a quick update. Also, keep in mind that the most important data for today is the inflation rate from United States, and it's gonna be out in a few hours. So watch out, especially dollar index and especially US stocks, which is the ones that are right now on maximum. So pay attention and follow up the release of the data. I will also mention the comments on ATFX Connect social networks on X if you want to follow this, or either tomorrow I will make a short comment on the daily blog to market snacks. See you, and thank you for following the channel and content. Thank you for watching, and if you like it, please give me a thumb up and subscribe to our channel. Bye bye.